Welcome to This Explainer. Today, we're diving into one of the most fascinating and, frankly, bizarre corporate mysteries that's recently set the market absolutely ablaze. We're looking at a microcap company called Agape ATP Corporation, traded on the Nasdaq under the ticker ATPC. Now, on the surface, their corporate press releases paint this picture of a visionary global enterprise building a massive green energy and oil trading ecosystem. But when you peel back the layers and look at the actual SEC filings, a completely different, much more complex story emerges. So what is it? Is this the birth of a global energy titan, or is it a highly speculative maneuver designed to just keep a struggling stock afloat? Let's find out.
All right, let's just get right to it. To understand why everyone suddenly started paying attention to ATPC, you really just need to look at this number right here, 93.1%. On March 10, 2026, shares of this thinly traded microcap stock literally exploded, jumping a massive 93.1% in a single trading session. For a company that had actually lost over 96% of its value over the trailing 12 months, a sudden surge like this is a massive blinking radar beacon for the market. So what exactly triggered this incredible single-day rally?
Well, the catalyst was a highly publicized corporate announcement. Agape ATP announced that its subsidiary, ATPC Green Energy, had entered into a collaboration agreement with a Dubai-based global commodities firm called Citadel Investment LLC. The partnership was designed to, quote, jointly explore opportunities in oil, gas, petroleum products, and petrochemical trading across international markets. And honestly, the sheer scale of this ambition is fascinating. A massive cross-border oil and gas trading network sounds incredibly lucrative, right? Which totally explains why momentum traders rushed in to buy the stock. But it also raises a massive question about the company's true identity.
Section 1. From Wellness to Oil, the origin of Agape ATP. We need to look at where this company actually came from to understand just how unusual this leap into international oil trading really is.
Because wow, what a contrast. On the one hand, Agape ATP's legacy, and by the way, entirely current, core business is literally a multi-level marketing wellness company. They sell anti-aging supplements and dietary fibers out of Malaysia, where they were founded in 2016. And get this, they operate with just 18 total employees. But then on the flip side, they're suddenly announcing these massive new ventures into Dubai-based oil trading and electric vehicle charging networks. Think about that for a second. An 18-employee skincare and supplement business pivoting to become a global energy broker? That is a staggering corporate transition.
Moving on to Section 2. The Green Energy Pivot, Building an Ecosystem. Okay, so management didn't just jump straight from vitamins to oil overnight. They actually spent the last year attempting to completely rebrand themselves under the banner of sustainability. And they laid out a really ambitious roadmap to do it. First, they signed an agreement to acquire a 51% controlling stake in Volt Industries. That's a Malaysian EV charging developer. Second, they announced a plan to finance the construction of 50 EV fast charging stations across the state of Pahang. And third, to fund this grand vision, they announced a massive $23 million private placement from institutional investors in March of 2025, basically selling 46 million new shares at 50 cents a pop. If you only read their press releases, you'd think this was a rapidly expanding green infrastructure giant.
Which brings us to Section 3, peeking inside SEC filings, the financial reality. Because, corporate PR and financial reality, they're often two completely different things. Let's dig into the official accounting. Let's cut right through the noise. Here are the company's actual hard financials for the first quarter of 2026. Despite the millions of dollars in proposed infrastructure and global oil trading agreements, ATPC generated only $273,658 in total revenue for the entire quarter. Meanwhile, their operating cash flow was a negative $394,770. That means they are actively burning through cash just to keep the lights on. And looking at the trailing 12 months, their net income sits at a negative $2.3 million. These are not the financial metrics of an energy titan, folks. These are the metrics of a microcap company struggling to sustain its basic operations.
And honestly, the situation is so severe that it triggered this, a going concern warning. Deep inside their Q1 2026 filings, management and their independent auditors explicitly stated that there is, quote, substantial doubt about Agape ATP's ability to continue as a going concern. They cited recurring net losses, an accumulated deficit of over $12 million, and near-depleted operating cash reserves. This is literally the financial equivalent of a flashing red emergency light.
Section 4. Red Flags and Reverse Splits, Capital Market Risks. When a company's fundamental business is burning cash, they often have to turn to aggressive tactics just to survive. And that leads to a whole new set of risks for shareholders. Agape ATP has been utilizing some incredibly aggressive capital market maneuvers just to maintain its status as a public company. After getting slapped with multiple warnings from NASDAQ regarding their sub-dollar stock price, they executed a massive 1-for-50 reverse stock split in February 2026. The goal there? Just to artificially inflate the share price and avoid getting delisted. Furthermore, they filed a $200 million mixed shelf registration. Basically, this gives them the right to create and sell up to $200 million in new shares to the public. That is an extreme dilution risk for anyone holding the stock.
Now you're probably wondering, wait, if they're burning cash and facing survival warnings, don't they have any assets? Well, this is where the story gets truly bizarre. Where is the $24 million? Their balance sheet actually shows total assets of around $24.9 million. But when you look closer, almost all of it is tied up in a single, highly unusual line item. A massive $24 million deposit sitting with a third party called Bai Cheng Investment Management.
I want you to hear the exact language from the SEC filings regarding this $24 million. The company states that as of March 31, 2026, no specific investment has been finalized. The funds remain unallocated and their financial return is uncertain. So, to put that into perspective, nearly the entirety of this company's equity value is just locked up in a third-party account with absolutely no designated purpose and no guaranteed return, all while the actual operating business is starved for cash. It is a highly irregular capital structure, and analysts view it as a major red flag.
Section 5. Wellness or risky speculation. The final verdict. It's time to put all the pieces of this puzzle together. We have to weigh the incredible hype of the corporate announcements against the sober reality of the financial filings.
And here is the ultimate punchline. Look at where their actual revenue comes from. Despite all the loud press releases about Dubai oil trading, the 50 EV charging stations, and a global green ecosystem, in the first quarter of 2026, roughly $213,000 came from health therapy products, and $38,000 came from health services. The revenue from the green energy and oil trading segments? Exactly $0. Literally 100% of the money this company actually makes still comes from selling wellness supplements in Malaysia.
Which brings us to our final question for you to ponder today. Is ATPC a visionary ecosystem or a risky speculation? We've seen the 93% stock surges driven by exciting PR, but we've also walked through the SEC filings revealing going concern warnings, extreme dilution risks, and literally zero actual revenue from their energy ventures. So based on the evidence in this explainer, is Agape ATP Corporation genuinely laying the groundwork for a visionary global ecosystem, or is it a highly speculative, risky microcap using buzzwords to survive? The decision is ultimately yours. Thanks for joining me on this deep dive, and keep learning.